The market in 2026 is quietly setting up for a major shift, and most investors won't see it coming. While everyone chases $500 and $1,000 stocks, there are real companies trading under $10 that institutions are buying, not penny stock hype, not lottery tickets. Real businesses with revenue, assets, and cash flow. Today I'm breaking down 8 stocks under $10 that analysts believe have meaningful upside. Some are turnaround plays, some are steady compounders. One is high risk, high reward. Pay close attention, because price is what you pay. Value is what you get. If you're serious about building long-term wealth, hit the subscribe button and tap the like button. We're building a community of investors who think long-term and act with discipline. And comment below, are you investing more in US stocks or international markets? Right now, you're standing at a crossroads. One path is fear, high rates, global tension, slowing growth headlines. The other path is opportunity. Many international stocks are trading at lower valuations than US names. Banks, telecom companies, energy operators, and industrial firms are priced for caution, in some cases priced for failure. But here's the reality. The global economy is still growing, infrastructure spending is rising, energy demand is not going away, digital services are expanding in emerging markets, governments are supporting critical industries, capital is flowing toward essential services, and strong companies with durable cash flow are gaining power. That's the backdrop. Now let's break down these 8 stocks using a business owner mindset. Stock number 1, Itaú Unibanco. Ticker, ITUB. You might think Itaú is just another large Brazilian bank, but this is one of the most dominant financial institutions in Latin America. It controls roughly 20% of Brazil's commercial foreign exchange market. That kind of market share creates stability. The bank operates across retail banking, small and medium-sized business lending, asset management, investment banking, and insurance. Management execution has been strong. Analysts point to its leadership in technology and digital banking. It has outperformed in higher-income retail clients and business banking. That matters because better clients often mean better margins and lower default rate. The stock trades around $9. Analysts have a target near $9.30, implying limited short-term upside of about 1%. So why consider it? Because quality banks often compound over time. If Brazil enters a stronger economic cycle, loan growth and fee income can accelerate. This is a steady, institutional quality bank trading under $10. Not exciting, but solid. Stock number 2, Banco Bradesco, ticker BBD. Now let's talk about Banco Bradesco. This is another major Brazilian bank. It leads in insurance, private pensions, leasing, and asset management. Unlike Itaú, Bradesco is in the middle of a turnaround. Management is executing a 5-year plan to improve efficiency and profitability. Analysts expect return on equity to reach its cost of equity by the second half of 2026. That's a key milestone. When banks earn above their cost of capital, investors reward them with higher valuations. Analysts believe its price-to-book ratio could expand meaningfully within the next year. The stock trades around $3.98. The price target is $4.80. That's roughly 21% upside. This is not a hyper-growth story. It's a restructuring story. If execution continues, patient investors may benefit. Stock number 3, Grab Holdings, ticker GRAB. Now we shift to Southeast Asia. Grab is a leading super app operating in countries like Singapore, Indonesia, Malaysia, Thailand, Vietnam, and the Philippines. You might think it's just ride-sharing. It's much more. Grab combines mobility, food delivery, and digital financial services into one ecosystem. Millions of users, drivers, and merchants operate on the platform. This creates what analysts call a flywheel effect. More users attract more merchants attract more users. That strengthens the competitive moat. Revenue comes from transaction commissions and service fees. The stock trades around 4.45 cents. Analysts see a price target of $6.20. That implies about 39% upside. Future catalysts include growth in digital banking, quick commerce expansion, and long-term potential from autonomous vehicles. This is a growth platform in an expanding region with rising middle-class demand. Stock number 4, Aegon, ticker AEG. Aegon is a Dutch insurance company offering insurance, savings, pension, and investment products globally. Recently, it announced plans to move its headquarters to the United States and rebrand as Transamerica by 2027. That's a strategic shift. Right now, management is focused on de-risking the business and strengthening the balance sheet. That may reduce short-term capital returns, but it improves long-term durability. The stock trades around $7. The analyst price target is $8.65, implying about 11% upside. Insurance companies can be steady compounders when managed well. This is more of a stability play than high-growth story. Stock number 5, Gerdau, ticker GGB. Gerdau is a steel producer operating across the Americas. About half of its earnings come from the United States. That exposure is important because the U.S. long steel market has seen strong demand and improving prices. The company also runs a large scrap metal recycling operation which supports cost control and sustainability. Another key factor is capital discipline. Gerdau has reduced capital expenditures. Lower spending can support stronger free cash flow over the next few years. Analysts project an 8% free cash flow yield in 2026. The stock trades around $4.12 with a target near $5.20 with a target near $5. That's about 21% upside. This is a classic industrial stock tied to infrastructure, construction, and manufacturing demand. Stock number 6, Grifols. Ticker GRFS. Grifols is a Spanish healthcare company specializing in blood plasma-derived therapies. Its products include immunoglobulins for immune deficiencies and albumin used in critical care. After the pandemic, the company faced operational struggles and accounting concerns. Investor confidence dropped. But demand for plasma therapies remains strong worldwide. Analysts believe the company's growth outlook is not fully reflected in its current valuation, and the stock trades around $9.72. The price target is $12.20, implying roughly 26% upside. The key risk is execution. Grifols must deliver consistent earnings growth and rebuild trust. If it does, valuation could improve significantly. Stock number 7, Turkcell, ticker TKC. Turkcell is the leading mobile operator in Turkey with additional operations in nearby regions. It provides voice, data, TV, and enterprise services on mobile and fixed networks. Analysts project about 7% inflation-adjusted revenue growth by 2026, with margins around 43%. But those are strong margins for telecom. A major catalyst is the commercial launch of 5G services. Faster networks can drive higher data usage and premium pricing. In addition, data centers are expected to represent around 10% of total revenue within 5 years. The stock trades around 7.02. The target is $7.45, suggesting moderate upside of about 6%. This is a steady cash flow business with digital expansion potential. Stock number 8, CSAN, ticker CSAN. I saved the most explosive opportunity for last. CSAN is a Brazilian conglomerate investing across renewable energy, natural gas, agribusiness, mining, and rail transportation. It owns stakes in major businesses, including a joint venture with Shell and large infrastructure assets. The company is actively working to reduce debt and strengthen its balance sheet. The stock trades around $4.88. The analyst target is $7.50. That's roughly 54% potential upside. But this comes with higher risk. CSAN operates in cyclical industries. Commodity prices and emerging market volatility can impact results. This isn't investing if you don't understand the risks. It becomes speculation. Only risk capital you can afford to lose. But if debt declines and operations stabilize, the upside could be meaningful. Here's the lesson. Stocks under $10 are not automatically cheap. Some deserve to be low. Others are simply overlooked. In this list, we saw dominant banks, telecom operators, industrial producers, healthcare firms, and digital platforms. Some are turnaround stories. Some are steady income plays. A few are higher risk growth bets. The key is discipline. Think like a business owner. Focus on cash flow. Watch balance sheets. Be patient. The market is a voting machine in the short term, but it's a weighing machine in the long term. If you found value in this breakdown, subscribe to the channel and join our community of long-term investors. Invest wisely. Stay focused on what matters, and I'll see you in the next one.